We do not have time to mess around. Yesterday, I did a video and I mentioned that I still had a target of around $51,000 for Bitcoin. We broke through that today, and as I mentioned on that video, I didn't actually want it to happen so soon because that leaves us with a bit of a worry considering we're so early into August. So right now, everybody must be wondering, okay, if we're at that level, what do we do now? Is the worst of it over, or is there more bad downside to come from here? So I want to get into that. This is going to be a super quick video because I went into detail yesterday. All I'm going to do today is update on what happened from yesterday to today. So if you didn't catch that video, be sure to go back and watch it. For the sake of saving time, I want to get straight into this because I want you guys to have this content before the US session opens for today, because I think that is the major one to look out for. So let's get into it. If you're new here, welcome. If you're returning, welcome back. Be sure to smash that like button nice and early because it helps to get this video around the internet, even to all the haters who commented on my video yesterday telling me that I am an idiot for suggesting that you shouldn't buy the dip. Now today, if you follow that advice, you wouldn't be regretting it. So let's go. So this is Bitcoin. This is my current position. I have shared this on Twitter today with a lot more detail about it. So I won't go into too much detail, but essentially following the method that we trade over here on this channel, we expect 3 levels rises, 3 levels dips. They don't always increase and decrease in price. They can be sideways levels, rises and dips. It's more about the volume, not about the increase and decrease in price. So with that in mind, when we have a look at this accumulation phase, we can see that there was one drop through here, a retracement, another drop through here, and this is why the entire time we have been expecting a 3rd level drop on this channel, and that is what seems to be happening right now. And the question that remains is, where's the end of this drop going to be? One thing that has happened is the previous liquidation zone that I have identified to you guys that sat between 50,800 to 54,200, that's been taken out now. So this liquidity is now gone in the current candle down. And the next level that we have is this one right here that sits between about 45,870 and 47,300. Now you can see on my chart that I've got a couple of other things marked here. I do have area of heat map orders. Again, we're going to go over that together just to see if they're still there. They're sitting at about $43,000. And then I have this yearly open marked at 42,314. The reason that I have that marked is because one of my mentors, probably the person that I learned the most from in my whole trading career, he identified this area as in a video that he did not too long ago. Actually, this is his channel, 𝗟𝗶𝗃𝗵, and this is the video right here where he goes into detail about the significance of the Bitcoin yearly open. So if you haven't seen that video right there, I highly encourage you to go and check it out. I think it's a very, very important video and you will learn a lot from it. But essentially that makes the yearly open a very significant level that we have to look out for. It currently also lines up with the daily time frame 800 EMA. So if things keep getting worse from here, that is going to be a level that we really need to watch for. Now, there is no guarantee that it's going to get worse from here, but until the bleed stops, these are key levels along the way to look out for: the 47, the 45, and around 43, 42K. Now, because we've had this bleed, we want to start looking to lower time frames. This is where we start looking for stopping volume candles. The stopping volume candle is the hint that the current trend, whichever trend it is, has basically had the brakes put on it and we will get some sort of a relief soon. So we need to hunt for that stopping volume candle on any time frame that we can find it. It generally looks like this. This on the 4-hour time frame is a good looking stopping volume candle. However, the follow through should not come back into the wick. So the current candle that we have, there's still an hour to go. It is eating back into this wick. So I would keep an eye on that, especially because it's wiped out the major liquidations that were in this level. It literally came right to the bottom of it. I would keep an eye on it, but this isn't where I usually gain major confidence that the bottom 4 now is in and that there will be some sort of a relief recovery. I would like to see this candle actually move out and away from the zone. So 4 hours not great, which means I now need to try and find something else. So the 1 hour has a stopping volume candle as well. We can see there's a big volume spike in it. However, we're still under 50% Asia, which as a day trade trader, that's an area that you would look for rejection. If price pushes up to it and still gives you bearish candlestick formations, then you would expect further downside. If it breaks up and retests it, then you would expect that the trend is about to change. So that hasn't happened yet. That was something I was keeping an eye out to potentially happen in UK, which hasn't happened. UK, if we have a look at the 15-minute time frame so we can get a really good breakdown of what each session has done, UK was really indecisive for quite a few hours here today, and you know, there's still the extension time for it to finish. It hasn't returned to the low and it hasn't broken below the low, but what looks like is happening here is we are in the process of a potential H pattern, which it literally looks like a H. Okay? Oh, you guys hate it when I say H. It's an H pattern. I think that's what you meant to say. But anyway, it's essentially where instead of a W formation, we get this rounded kind of price action after the first peak, and then price returns usually to the candle close of the first peak. And if it doesn't break too much lower than that, it's keeping these traders in this wick trapped, and that's where you would expect price to shift out into the upside. A H pattern is different to a W. So when you can identify a clear W pattern, a clear W pattern gives you the higher low from the first peak, and it usually doesn't return to where the trap traders are, and that's a clear reversal signal in the right part of the cycle. But when it's an H pattern, two things can happen. So the H, I'm trying to retrain myself how to say it, the H will complete, and from there is where you need to look for new market structure, so higher highs and higher lows, and that will tell you that this was just a second attempt into this liquidity zone. It doesn't want to return or break down below it, and then you can start looking for long positions. But the other thing that can happen is it's coming down for lower liquidity below, so it actually breaks below the first peak, retests that, and then you know it's coming down for lower liquidity. So it's a bit different. All it really is identifying to you is that whatever was down here was not yet fully filled, and it's coming back for it, and then the next decision will be made, and you have to watch a price action at the time to understand what that decision is going to be. So for me, I'm very, very cautious. I'm not going to take any positions in UK, but those are the things that I'm going to be watching out for in the US, because we have a big danger right now. We can see that the major move today was made in Asia, and we know that because of everything going on with Japan increasing their interest rates and the carry trade and all that. You've probably heard about that on a million channels, so you don't need to hear it from me. I just like to talk about price action. But we know because of all of that, Asia has made the bigger move, and now we expect UK to either consolidate or attempt some sort of recovery or something like that before the US comes in and they react to this news. So we still need the US to react, and the US is usually very volatile and it brings in the most volume. So I would not say, again, probably going to get hate comments, that right now within the next few hours until the UK session ends is a buy the dip moment. At least wait to see what the US does, because we do have liquidity down below, we do have lower key levels right now, and the US traders, the US market makers need to react to the whole Japan situation. So let's take a look at the current trading light orders. This can give us a hint of where we might get a retracement before further downside. It might give us an idea where we could potentially get a bounce. At a very quick look, you can see here that this level here, there's a cluster of short orders here because they're above price, but they are in the white color. According to my personal trading light settings, white is kind of medium level orders. They're not huge. Red is a lot bigger, and we can see that the red orders are actually below price. So now we want to see what those levels are. If the US gives us a retracement and pushes up, then the zone to watch is going to be between about 56,500 to 56,800. That would be your target if you get the candlesticks showing you some sort of a bounce when the US opens. If we just continue straight down, then we've got our significant orders between 47 to about 47 and a half. So keep an eye on those two ranges, and then you just look at the actual price action. As long as it's creating lower lows and lower highs, we remain bearish, but we're looking on lower time frames at around the session changeovers for some sort of a hint that some recovery is about to come in soon. That may not be today. It may not even be over the next couple of days, but these are just some levels to watch in the meantime. If we do happen to come into that 47K region, it will dip into this next level of liquidity. It's between these two pink lines right here. Let's take a quick look at high block to see what has just recently opened. Look at that. There is major liquidity now above price, of course, because people are shorting this thing wherever they can, and that opens up liquidation levels above price. There isn't a lot currently still below price. The lowest level, again, it's around the 47, 48 kind of K region currently. But of course, this can build. We can build more leverage as the price keeps dropping because people are still in the buy the dip frame of mind, which you can see here on the comments on my video yesterday. She has no clue what she's talking about. It's not going below 55K. Joke's on you, my friend. Why on earth would I listen to this girl? Probably because you don't want to get liquidated, which you probably did last night. I was thinking the same thing. She doesn't know what she's talking about. And then, of course, as always, my TT tribe come in and back me up. Guys who aren't making any money because they refuse to take advice from talented traders. Must be some trolls who've never seen her before. Good day trader, terrible investor was telling people months ago to buy alts for the bull run off the 4-hour moves. Yeah, we bought them and then we also sold in June. So where were you when we did that? This age well. How are your spot bags looking, bros? How's that dips? Thank you guys for all your comments. I do read all of the comments. People tell me don't react to the bad comments, but I like to troll back. Like, what can I say? I'm immature. Looking at everything else, S&P is sort of settling actually at the moment. It's having just a little bit of it looks like it's starting a consolidation. So we are continuing down, but the last couple of 4-hour candles have kind of stayed in the same level. So maybe we'll consolidate a little bit, but I'm still keeping my short open on the S&P. Same thing goes for the NASDAQ. Looks like we're consolidating, may start a little bit of a retracement. Who knows, but we are due for some sort of relief. But look at this VIX. Now, this is the volatility index of the S&P. And I mean, this looks like a meme coin right now. This has just shot up like absolute craziness based off everything that's going on. I mean, how many bad news events can we have? There's the war escalation in the Middle East. There's the Japanese interest rate news. There's what else is there? Recession news. There is Jump Capital getting out of the crypto market as market makers and selling. There's just so much that is piled on and just caused this price to just do an absolute dump. So that's why I don't think you should buy alts right now. Definitely focus on Bitcoin. Bitcoin's going to do its pivot first, and once it does, then it will be the time to buy the dip. But you don't want to be buying the dip when the dip keeps dipping. Like, that's just not intelligent. Finally, I will leave this video with some good news. When the time comes, when we do find that price action that shows us a little bit of a relief rally is going to come in, we now have a very big CME gap. Now, not all gaps must get filled, but around 80% of them do get filled. So when the time is right, we now have this gap between about 59.5 to 62,500. So we would expect at some point in time that we're going to come back to fill that. Again, you can't say when. That's the thing. When you look at this gap here, it's not actually filled. It's now a double gap, but that was 21 days. When we look at this gap here, that took 49 days. There are a few little gaps down here on lower time frames. You can find them that actually have not yet been filled at all. And then you can look at really big gaps like this that take 534 days. So yes, most gaps do get filled, but it's not a guarantee of when they will get filled. So it's not really a trading strategy to trade off gaps. However, if we do see some sort of a bounce whenever we happen to see it, if the market remains bearish after that bounce, which I mean, I really hope not, but we never know, then this could be the highest price to sell at anything again that you may have and you no longer want. If you enjoyed this video, smash that like button and also come and join us in Discord. Stay up to date with my Twitter because it's much easier for me to do a Twitter post than to do YouTube videos. All of the links to my social media are in the description of this video. Use those because there are a million scammers out there pretending to be me, pretending you can pay for some sort of added advice or me to invest on your behalf or whatever. Just know that I am like antisocial and I do not not DM anyone ever. If you think you're talking to me in a DM, you're not talking to me. You, my friend, are talking to a scammer. So use my social media links. Come and join us in the Discord. Come learn this method in full. My Discord today is chill AF because we have expected this since June. A lot of people, this has caught by surprise. I'm not bragging or I'm not tooting my own horn. I simply trade the method that I learned that worked for me, that still works for me to this day, and I just stick to rules. That is simply it. And when you have that kind of confidence in a trading strategy, and look, it may end up being mine, it may end up being another one that you learn, but when you gain that confidence, there is no need for you to panic anymore on moves like this because you see them coming. My second advice is going to be stop following people that turn bearish after the price is bearish. Stop following people that turn bullish after the price is bullish. You want to be following people who can preempt this. That's how you stay safe. Okay, my rant is over. I'm going goodbye.